Pakistan's economy was being written off, growth stagnant, industry faltering, confidence low. Those were the headlines of the past, but 2025 tells a different story. A year not of miracles, but of stability. A year not of takeoff, but of a positive, steady trajectory. The question now is not of survival, it is of sustainability. Pakistan Stock Exchange became a global headline this year as its benchmark KSE 100 index surged more than 47%, ranking among the world's best performing markets according to Bloomberg. Inflation, which peaked at 38% in 2023, was easing rapidly and nearing zero earlier this year before devastating floods destroyed crops and infrastructure at large, inflicting nearly $3 billion worth of losses, pushing prices back up. Inflation is still averaging between 5 and 7%. The rupee has remained steady, supported by IMF-backed fiscal discipline and improving foreign exchange reserves.
Even the world noticed Pakistan's economic turnaround. Fitch, Moody's and S&P all upgraded the country's sovereign ratings, citing fiscal discipline, strong reserves and meaningful reforms.
From the peak of 22% last year, State Bank of Pakistan, by December 2025, has trimmed down its interest rate to 10.5%, making it easier and cheaper for businesses to borrow.
Restoring liquidity, stabilizing the currency, and giving business confidence a much-needed boost. The large-scale manufacturing sector showed signs of revival, growing cumulative 5% year-on-year for the first 4 months of fiscal year 2025-26, which is the best since 2022. Pakistan's IT exports surged 19% year-on-year during the first 5 months, driven by a growing global clientele base, especially in the Gulf, and relaxed foreign currency retention rules, a clear signal that business confidence is returning. Foreign investors also took note. The OICCI's 2025 survey shows 73% of members now recommend Pakistan for FDI, up from 61% in 2023. Pakistan signed historic trade agreements, including an energy pact with US, while advancing deals with Turkey, Indonesia, Uzbekistan, Iran, Australia, and Vietnam. These moves were designed to boost investment, cut tariffs, and expand cooperation across energy, IT, mining, and industrial sectors, signaling Pakistan's strategic economic re-engagement. Pakistan's mineral wealth also drew global attention in 2025. From gold and copper in Balochistan to rare earths, companies from the US, China, Japan, and Saudi Arabia eyed trillions of dollars in untapped reserves. In an energy-hungry world, Pakistan emerged as a strategic hub. Yet 2025 may not have solved all of Pakistan's economic challenges. Low growth, rising unemployment, and a widening current account deficit remains real risk. But 2025 has restored stability, and that matters. Now economic managers must use this stability wisely so that 2025 becomes the foundation for 2026 to be the year of growth.